Hello there, I hope you are fine and you are doing well. So welcome to our lesson today. We are going to start an overview of financial accounting. Financial accounting in accounting, it is paper number 1. So I'll give you an overview of what this subject entails. So financial accounting is a paper that is intended to equip a candidate with knowledge, skills, attitudes that will enable him or her to prepare financial statement for different entities. So, financial accounting, we prepare the books of original entry and the basic ledger accounts and the double entry system. So, what we are saying is that in accounting, what we do is we record transactions, so the daily transactions, annual transactions. So we record all the accounting transactions, we classify them, we summarize them, and finally we prepare the final books of accounts. So when we are preparing the final books of accounts, we have 4 final books of accounts, starting with the income statement, statement of changes in equity, statement of financial positions, and the statement of cash flow. Those are the 4 final books of accounts that are prepared by an accountant at the end of the year. But on daily basis, we keep preparing the original books. Every day we record transactions, then we summarize them in our final books of accounts. So we shall have several areas that we are supposed to cover in this unit. Remember, financial accounting is a core subject in accounting. We need to understand the double entry. The double entry is where we have a debit entry with a corresponding credit entry. So that is what we mean by the double entry system. So double entry system is where a debit transactions or a debit entry must have a corresponding credit entry. So a candidate should prepare basic financial statement of a sole trader, partnership, companies, and manufacturing entities, and not-for-profit making organizations. So sole trader is a business carried on by one person as a sole proprietorship business. So partnership is a business, is an association of 2 or more persons who come together to do business for a common purpose. So a company is an association of 2 or more persons who associate together to conduct business as a company. And manufacturing entities are those entities that conduct manufacturing business. So not for profit making, we have the entities or firms that are established not for making profit purpose. In most cases, they are the charitable institutions. So another learning outcome is to comply with the regulatory framework in the accounting field. So in accounting field, we have the regulatory framework, the regulatory framework, or what we call the accounting standards. So we have the international accounting standards, we call them IAS, and we have the generally accepted accounting principles, those are the GAPs. We have the International Financial Reporting Standards, IFRS, and when you are accounting for public sector entities, the government institutions, we have the IPSAS. international public sector accounting standards. So those are the standards that we use in the field of accounting. So then we shall need to learn about the accounting for assets and liabilities. Accounting for assets and liabilities. Analyze financial statement by use of ratios and statement of cash flow. Ratios and statement of cash flow. So these are the statement that we use to analyze financial statement, to analyze a business. So the content, our content will be, or the topics that we shall have is that we shall have introduction to accounting. Introduction to accounting, we shall require to go through the nature and the purpose of accounting, the the objectives of accounting. So why do we prepare the books of accounts? Why? So objectives. So who are the users of accounting information and their respective needs? So we shall still have to learn about that. So the users of accounting information and their respective needs. The accounting equation, remember accounting equation is, we say that total asset is equal to equity plus liabilities. Equity plus liability. So asset equals equity plus liability. Or in simple terms, we can say that total asset is equal to capital plus liabilities. So the regulatory framework. So we shall still continue with another area that is regulatory framework accounting. Regulatory bodies such as the Institute of Certified Public Accountant of Kenya, the IFAC, Financial Accounting Committee, IASB, IEPSAB. So accounting standard, IAS and the IFRS, the importances and the limitations. So another area will be professional ethics, accounting concept and principles, qualities of useful accounting information. So the next topic will be topic number 2, where we shall go through recording transactions. So we said that accounting starts from recording of transactions. So we shall have source documents, quotations, purchases, order, statement of account, remittance, advice, receipt, petty cash vouchers, sales and purchases invoices, credit notes and debit notes, bank statement, book of original entry. We shall have the sales journal, purchase journal, return inwards, return outwards, journal, cash book, petty cash, and the general journal. Double entry in the ledger, general ledger, sales ledger, purchase ledger. We shall have the trial balance. So computerized accounting system shall have the role of computers, application and accounting software in the accounting policies. So the benefits and the challenges of operating computerized accounting system. So topic number 3 will be accounting for assets and liabilities. Accounting for assets and liabilities. We shall go through accounting for assets. Assets, you have property, plant and equipment, the PPE. So we shall learn the recognition, capital and revenue expenditure, measurement, depreciation and evaluation, disposal and disclosure, property, plant and equipment schedule. We call them the fixed asset movement schedule. We shall prepare that. So intangible assets, recognition, measurement, amortization, impairment, and devaluation. So for intangible asset, we use when intangible asset lose value, we use the term amortization or impairment and devaluation of intangible asset. But if it is a fixed asset that is losing value, we use the term depreciation of fixed asset. So inventory is another word for stock. So recognition, measurement, and evaluation using specific cost method, first in, first out, that is FIFO, and the weighted average cost. The next area will be trade receivables. Remember, trade receivable is another term for debtors. So we have the bad debts and allowance for doubtful debts and receivables control account. In other words, the debtors control account. Accrued income and prepaid expenses, cash at bank, cash book, and the bank reconciliation statement. Remember, the bank reconciliation statement is a very important statement in accounting where we reconcile the cash at hand or the cash as per the balance, the cash as per the cash book and the cash as per the bank statement. Then we have the cash at bank. That is a cash in hand. So cash book and petty cash. Cash book and petty cash. Then we shall have accounting for liabilities. Liability, remember, in the statement of financial position, it is on the other side of the credit side of the statement of financial position. So we have the bank overdraft. Remember, we classify liability into two. We have the long-term liabilities, or what we call non-current liabilities, and we have the current liabilities. So those are the two classifications of liabilities. So liabilities, we shall have the bank overdraft, cash book, and the bank reconciliation, trade payables, payables control account, loans, accounting treatment of repayment of principals and interest, prepaid income and accrued expenses. So topic number 4 will be correction of errors in the suspense account. Remember, we have the errors in accounting where some transactions may be erroneously posted as books of accounts are being prepared. So we shall go through correction of errors in the suspense account. So the topic number 5 will be financial statement of a sole trader, where we shall prepare the income statement of a sole trader, statement of financial position of a sole trader, and then the preparation of financial statement under incomplete information. Incomplete information is where the owner of the business doesn't maintain proper books of accounts, and therefore he is unable to know if there is cash lost, the amount of stock lost, maybe through fire, theft. So the fact that the books of account are not well kept, the sole trader is unable to ascertain the correct balance of cash or cash stolen. So those are the things that will be of interest in this area, the preparation of financial statement under incomplete information. The other area, topic number 6, will be financial statement of a partnership. Remember, a partnership is a business of partners, those people who come together to conduct business in common. Each partner is required to contribute capital when the business is starting. So the capital they contribute becomes the fixed capital of the business. So we shall have the partnership agreement, which is a document of agreement. The agreement that the partners have to be documented in a partnership agreement, or in another one is called a partnership deed. So distinction between current and fixed capital. So the current account, here we shall be required to prepare the current account and the capital account. We shall prepare income statement of partnership, the statement of financial position, and the statement of changes in the partnership. That is, we shall also go through account prepared in the event that there are changes in partnership. Changes here means that in the course of the year we have admitted a new partner, we have retired a partner, and the change in the profit sharing ratio in the event of admission or retirement of a partner. The next topic will be financial statement of a company. Remember, a company is a legal entity, separate and distinct from the members. So we shall have the types of share capital, because for you to be a member of a company you need to buy shares, and therefore you become a shareholder. So you have two classes of shares, the ordinary shares and the preference shares, and therefore we shall have two types of capital, the ordinary share capital and the preference share capital. Shall have the issue of shares, exclude the issue by installment and forfeiture. Another area will be types of reserves. We have the share premium, revaluation reserve, general reserve, revaluation reserve, retained profits, etc. Income tax. Remember, a company is a legal entity and it has taxable capacity. Taxable capacity means that the company will be subjected to tax. It will pay its tax. It is required to account and pay for its income tax. So the other area will be financial statement, the income statement and the statement of financial position. And finally, we shall prepare the published financial statement. We describe a complete set of published financial statement, but not preparation, but we describe a complete set of published financial statement. The other area will be financial statement of a manufacturing entity. Manufacturing entity, remember we say that we have those companies that manufacture goods. Starting from raw materials are put into a process. After being processed, we have the finished goods. So the finished goods are now classified as inventory, or maybe the stock that is now available for sale. So the conversion from raw materials into finished goods is what we mean by manufacturing or processing. So we shall go through that. So the other area, so we shall have the features of manufacturing entity, classification and apportionment or apportioning the cost between manufacturing and selling and administration. So financial statement, manufacturing account, income statement and the statement of financial position. Remember, statement of financial position is what we used to refer as the balance sheet. It's what we mean now by the statement of financial position. Another area will be financial statement of a not-for-profit making organization. So those organizations that are formed not for an object or not with a core business of making profit. In most cases, they offer services or they offer charitable services. So we shall have the features, the types of funds and their accounting treatment, income and expenditure account, the statement of financial position. Topic number 10 will be analyzing financial statement. Analyzing financial statement, statement of a cash flow, that is statement of cash flow, categories of cash method, of preparing financial statement of cash flow and the importance. So we shall have category of cash, methods of preparing statement of cash flow, and their importance. Remember, we have three categories. We have operating, so cash flow from operating activities, cash flow from financing activities, and cash flow from investing activities. Those are the three categories, or what we call three activities of cash flow. So the other area will be financial ratios. So financial ratios, we shall have definition, categories, analysis, and interpretation, application, and limitation. So this is where we shall go through the quick ratios, asset, liquidity, activity, all those. We shall go through that. So the topic number 11 is introduction to public sector accounting. Introduction to public sector accounting. Remember here, these are the accounts prepared by government entities or government units. So here we use the International Public Sector Accounting Standards. So that's a standard that we use when preparing the public sector accounts. So we shall go through the features of public sector entity as compared to private sector, the structure of the public sector, the national and the county government, the state corporations and the other agencies, regulatory structures and the oversight, establishment, mandate and functions, Director of Accounting Services, National Treasury, Parliament Committee, accounting officers and national and county levels, objectives in public sector, financial statement, objectives of IFSAS. So accounting techniques in public sector, the budgeting, cash, accrual, commitment and fund. Preparation of financial statement should be excluded. So here we don't prepare accounts. We don't prepare account for the public sector in this level. In this level we shall prepare in other levels when we proceed to intermediate level in CPA. So the others are emerging issues and the threats. So that is what we shall go through in this subject known as financial accounting. Financial accounting, we shall have a total of 11 topics. 11 topics. That is what we shall go through. We hope that we shall have a good cooperation. We shall go through that area together. Thank you, and wait for the next lesson. Thank you.